In this video, I'm going to be showing you guys how you're going to trade NZD interest rate successfully, and then I'm going to be sharing an additional setup for the upcoming week that is positioned in a very interesting position. Okay, with that being said, let's just get straight to business. So we'll be taking a look at our fundamental analysis first before we get into our actual price action. As we are switching to our fundamentals, make sure that you like this video, subscribe to the channel, make sure that your bell notification is turned on so that you won't be missing any video in the future that is going to be uploaded here. Okay, so this week you have quite interesting setups, both from the technical and the fundamental perspectives. Okay. Okay, so this is our calendar here. Upcoming Monday, the 14th of August, we don't have anything, and then on Tuesday, the 15th, we have the AUD, the GBP claimant count. We're not trading the CAD CPI, not trading it as well, and then USD core retail sales, not trading those as well, but those are also very high impact news events with the potential of moving a market in a very volatile way within a very short period of time. And then this right here on Wednesday, and this is where my interest for the week is at, which is the NZD interest rate, and this is on a fundamental perspective. Okay, as you can see that and the potential analysis for the interest rate is that it is going to stay on hold. As you can see that this is the previous and then this is the focus, which means that it is anticipated that it is going to stay the same on hold. Okay, and then at that time we will be seeing the actual, which is going to determine as to how is the New Zealand dollar going to react. Is it going to gain strength or is it going to lose strength? Okay, and then that is on Wednesday the 16th, and then 8 a.m. same day we have the GBP CPI. Definitely going to be trading this one as well year over year. Yeah, and then on Thursday we have the AUD employment change, which is what I'm also going to be trading as well. And then Friday we have nothing. So from the fundamental perspective, we have 3 events this week that we are looking to capitalize on. Okay, so with that in mind, now let's switch to our technical analysis, and the first thing that we are going to be looking into is our DXY for the upcoming week. Okay, so we would start on our higher time frame, that is being the daily time frame, so that we can get the overall perspective of the market as to which direction is it flowing towards on a larger scale. Okay, so as you can see that we have a structure like this that's kind of been in a consolidation phase. Okay, so we just want to focus on the current price action. We have this structure as our current swing low, and then I'll take this one as our current swing high, and then we just want to focus in between. As I always say, the market simply moves in between 2 zones, and then we capitalize on how is it reacting on that significant zone, or how is it getting to the next significant zone. Okay, so once we have established our swings, which is our swing high and the swing low, what else can we easily spot on a daily time frame? Okay, so that would be this structure right here, which is our diagonal resistance structure. Okay, we see a structure like that. Okay, this one is irrelevant for now. Okay, it is irrelevant. It's a historical structure. Okay, we switch to a 4-hour time frame, and then from a 4-hour time frame, okay, we can see that that is at that area. Okay, but we also, from a 4-hour time frame perspective, we also have this trend line right here that we previously had on the previous week. Okay, so you can see, okay, that this one is on a daily time frame, and then this one is on a 4-hour time frame. So we have this trend line. This was our first touch, then our second touch, then our third touch to the trend line, and then eventually we ended up breaking this trend line, as you can see here, and then we reacted to this trend line. So we're potentially going to push up until this area right here, which happens to be in line, perfectly in line with our daily resistance structure, just like this, as you can see. And then once we break this structure, should the market break this resistance structure, then we are going to be anticipating a further push from this zone, okay, a further push from this zone all the way to that next significant structure like this. Okay, so all in all, what we are saying is that for the upcoming week, to simplify things, for the upcoming week, we are simply looking at this market. Okay, let me just remove those quickly. Okay, you can also see the structure right here where the market is currently pushing away from. Okay, we can see that this was a resistance, pushed the market down, came back, then market was pushed down, and then again here we had this resistance being broken and this one being broken. So indeed this market is in a bullish trend. So we are anticipating that we are going to be pushing from here all the way to 103.1712. Okay, and then that is our analysis on DXY. Okay, so then you switch to smaller time frames so that you can easily see the momentum of the market as it unfolds. Okay, so yeah, this is the analysis that we have on DXY. We are bullish. Our primary bias is bullish up until that 103 area right there, and then yeah, that is how we're going to be using our DXY. So we are basically bullish on pairs with USD as a base currency, and then bearish on pairs with USD as a code currency. With that being said, let us jump on to our next pair, which is EU Euro USD. Okay, then we're going to be doing the very same thing here as well. Starts on a higher time frame, which is our daily time frame, and then we get the perspective of the market. Just as I was saying that we use DXY for the inverse correlation, you can see that on DXY it was going to the bottom, and then on EU it is kind of pushing up, and then we have quite a similar structure like this, but in an inverse seed structure or format. Okay, so that's our current swing high. Then this area right here would be our current swing low. Okay, and then we're basically capitalizing here on this movement from here to there, and then from there to here. Okay, and then we switch to a 4-hour time frame so that we get a proper perspective as to what exactly is happening inside this market right here. Okay, so we can see that indeed we are coming from this significant structure right here. So we can look at this market in this format. We had an impulse, okay, and then a consolidation here, consolidation, and then as we are pushing here, we can potentially respect the structure, then come back here, and then a further push to the downside all the way to the structure, or we can just simply push from here all the way to that structure right there. Okay, so we highlight those, and then this is where our next significant structure is, our closest significant structure is from there. So yeah, we have that area, and then we also have a market that is breaking the structure like this. So we are bearish bias on EU up until this area right here. Okay, and then should we break this area, we're going to be anticipating it to push all the way to this structure right here, which would be, okay, if you look at it from this perspective, okay, if we draw that trend line, okay, so that it can guide us, as you can see that here, this trend line has been carrying this bullish market, a huge push to the upside, consolidation, so impulse, correction, then impulse, and then correction, but then we broke the support structure. Now we broke the structure, and then after breaking this structure, we came back to retest it, and then after retesting it, we started creating a consolidation, which is a form of a continuation pattern as well. So potentially now we are going to be pushing from that structure to this area, and then once we break the structure right here, the push is going to be all the way from that area to this point, which would be the 90% rule of this trend line, like this, as you can see. So this would be where we would anticipate the market to reach should we break this support structure right there. Okay, so with all of that analysis at the back of our head, now we are going to be switching to smaller time frames so that we can find our entry on this smaller time frames like this. Okay, then as you can see here, okay, so what I normally like to do is I normally like to clean my charts once I have the perspective from a bigger time frame, and then just use recent price action as is like this. It just keeps my charts clean, and then makes it much easier to not confuse myself. Okay, so as you can see, we had a 1, 2, 3 resistance there at the 1, 2, 3 touch on that resistance, and then here at the bottom as well, we're having a 1, 2, and then here on 3 we broke the structure. So here we're going to be finding our entry all the way from there to this point. As you can see, impulse, correction, and then impulse again is what we are anticipating here. Okay, then even the price action is also telling us the same story. As you can see that previously, once the market reached this area, price action started changing, then we started losing momentum and gaining bullish momentum again. Started losing bearish momentum, gaining bullish momentum. But when we take a look at this structure right here, we can see a continuation in terms of gain when it comes to the bearish momentum based on the size of candlesticks that we have right here. Okay, and then after that we'll be switching to our 30-minute time frame so that we can pinpoint our entry points. Okay, so we are looking for a short. Okay, we are looking for a short. So let's see. Okay, we would have a structure like this on EU. Okay, let me just check something. Okay, we would have a structure like this on EU. That's a conservative stop loss. We would have a 40 pip stop loss, and then an aggressive stop loss would make use of this area right here. Then we would put our stop loss just above the structure, which would give us a 20 pip stop loss and then a potential 100 pip take profit. So for a very conservative stop loss, we would be having a 40 pip stop loss, and then an aggressive one we would have to put it here. But then we're going to wait and see how is the market unfolding as the market open. Should we see a minor retracement maybe to this other block right here, then we'll potentially wait for an entry around that area instead of executing right here. But as you can see that previously we had this huge bearish candlestick, and then this bluish candlestick, and then huge, then this is the same pattern in terms of the price action that we had right there. And then now what we anticipate from here is that a drastic push to the downside is going to be occurring as soon as the market open and then it unfolds. So that is our anticipation on Euro USD. Okay, and then our last pair that we are going to be looking into for this week is going to be Euro NZD. Okay, before we get into Euro NZD, make sure that you like this video, you comment below as to how are you finding this entire analysis, which you'd like me to make more of these videos, what other videos that you'd like me to make. And then yeah, comment below, let me know what is your bias on DXY or Euro USD and Euro NZD for this upcoming week. Okay, and then make sure that you watch till the end of this video. I'm going to be giving you a fundamental perspective signal for this upcoming week for the for the NZD interest rate. Okay, so we'll switch to our daily time frame, and then we're going to be doing our analysis on the daily time frame. Okay, let's pinpoint our swing high. And then we can see that we have this structure right here where the market has been respecting multiple times, and yeah, you can see that it was respected, and then also respected here, because your support or your resistance is not just a single line, but it is a zone, and that is where we are currently at on Euro NZD. Okay, and then coming back to where the market is currently at right now, we can also see this diagonal resistance, beautiful diagonal resistance, and it looks like this. Okay, where we are potentially approaching a dead touch on that resistance. So we are having two resistance on a daily time frame like that. Okay, and then here at the bottom we have this support structure looking like this. Okay, and then that is what we can easily see from a daily time frame. Then we switch to a 4-hour time frame, and then this making use of the time frame confluence is for you to position yourself in the best possible way so that you can properly profit. Okay, to give you a proper example of that is that we have different types of traders. We have swing traders, we have hedge funds, we have scalpers. Okay, so hedge funds, they normally use bigger time frame, monthly time frame, weekly time frame, daily time frame, because they take trades that they are going to be holding for a week, a month, even possibly half a year. Okay, and then we have swing traders whereby we'll be looking at the market from a daily time frame, 4-hour time frame, and then we'll be taking trades that will be holding for a couple of hours, 4 hours, a day, or even a week. And then we also have scalpers, which are people who just want to capitalize on the current movement of the market. And then those people will be taking trades on a 5-minute time frame, 15 and 30 minute time frame. So by making use of a multiple time frame confluence, you are looking at the market from different types of perspectives. Okay, and then once you find an area whereby the majority or all of those all of those traders that I just mentioned are looking at the same thing. Okay, let me just make an example with this. If we switch to a weekly time frame, okay, from a weekly time frame, okay, we can easily see that indeed this market is approaching this resistance area. So we can see that from a weekly time frame, this is a resistance. So if you are trading based on a weekly time frame, you wouldn't just want to jump in or in a long trade as this market is currently here. You want to wait and see how is it going to unfold, as your primary bias here is that this market can retrace from this area. Even if it is still going to push upward, it will retrace before pushing up. That is your primary analysis on a market that is approaching resistance. then you can see that on a weekly time frame, you can see it here. And then if you switch to a daily time frame, we also see the same thing. So that means the institutional traders are seeing the same thing. And then here you can also see the same thing playing out on a daily time frame. And then at this point, you can then say, okay, possibly swing traders are seeing the same thing. So you're having a larger group of people interested in the same area, and that is going to induce more liquidity, and that is going to make a trade to be more accurate. Okay, and then now we are on a 4-hour time frame. Okay, we can see this market also. We can also see this structure. So now we are having a pattern within a pattern. Okay, so we can see that was a first touch, second touch, and then third touch. So now we are basically having three separate resistances here. Okay, we have this one on a 4-hour, and then we have this one on a daily, and this one on a daily. So at this point we have three separate resistance levels. Okay, and that just and that is just still on a 4-hour time frame. And then we would switch to a 2-hour time frame. Okay, and then once we switch to a 2-hour time frame, we can see something like this here as well. Okay, and then if we were to go to a higher time frame, this we wouldn't be able to pinpoint at this structure right here. As you can see that this is our first touch, second touch, and then that area is our third touch. Now you can see that this area, which is our third touch, is perfectly holding across multiple time frames. And then that goes to say that, okay, even a hedge fund is looking at that area, a swing trader is looking at this area, an intraday trader is looking at this area, a scalper is looking at this area. And then what are the odds with all of those people? What are the odds for the market to push to the downside compared to the market pushing to the upside? And then obviously the odds are going to be much higher. So that is why we make use of multiple time frame to be able to put ourselves in other traders' shoes, as catching a profitable trade will require you to be moving along the majority of the other traders. Okay, then when we switch to our 30-minute time frame, we can clearly see that indeed this market has been very aggressive when it comes to the bullish movement. But as you can see here, we started losing bullish momentum, and then we started gaining bearish momentum. As you can see that the size of bullish candlesticks started decreasing, then the size of bearish candlesticks started increasing. And as you can see here, indeed the bears are gaining strength around that area. So I'm very bearish on NZD, sorry, on euro NZD right here. I'm very bearish, looking for a short right here. Okay, so that's our first touch, second touch, and then our third touch. Okay, so I would love to see, okay, switch to a 15-minute time frame. I would love to see a structure in a form of a double top. Okay, we can see that that type of structure that I'm talking about has potentially formed. Okay, because we can see that this market pushed up, then retraced back, and then pushed back up again to that same area, and then now we are starting to push down. So at this point, we are basically trying to find an entry here. Okay, so at this point, okay, let me remove this. Okay, at this point, I would wait for the market to close below this trend line, and wait for a candlestick to close below this trend line, and that is where I'll be looking to execute my short here. But then we are having NZD interest rate on Wednesday, so the market might be stalling. Okay, as I highly anticipate that the New Zealand dollar is going to be gaining a lot of strength on this upcoming NZD interest rate. So the fundamental signal for the upcoming interest rates is that Euro NZD you sell, then NZD USD we are going to be buying, and then I will definitely be coming back with feedback and the results as well. And that right there would conclude our analysis for this week. Wishing you all the best for this upcoming week, and I appreciate you watching my videos. Don't forget to subscribe and turn on the bell notification. I'll be seeing you all next time.